Hey guys, it's Will here. I thought I'd go through the markets as I usually do. I'm using TC2000 here, and if you want to get a free trial or $25 off your purchase, check out the link in the description below. I like having these volatility stops, these red and green dots, which take into account the average true range for putting stops or seeing trends. And I can draw lines and stuff like that. So we saw the NASDAQ pull down. This is a MACD or price percent oscillator. And obviously the zero line, if you're above, it's higher momentum. Below zero, you're lower. But there's sometimes it gets really low here, and there's a chance for a reversal. But what happened is what some people call a blue ice failure. You could see it happening even a couple days before. But we got close to the 50, and we kind of failed right here. This was actually on Tuesday. There was not failure, but it reversed. It pulled back. And then yesterday we had this big pull down that broke down this short little uptrend. So there's basically a blue ice failure is kind of like you break through the ice. It kind of failed here actually, but as well. But it comes back and then it gets up to the 50 and it fails. And it just so happened that yesterday Fed Chairman Jerome Powell said some things that were hawkish, in terms of the market. So you get these little reversals before there's some information like a inflation print or a Fed speech or something like that. A lot of times it is coincidental with some sort of failure on a resistance level. But so you could have been in an inverse ETF, which I'll talk about in a bit, or if you buy stocks, shorting stocks, if you see this failure here. This is a very volatile time in terms of ups and downs, so it's a riskier time anyway to be trading or in swing trading or stuff like that. But you can follow those trends as well still at this point, but it is trickier. So if we go to the IWM, this one failed kind of closer to the 200, and obviously there's a lot of resistance, there's a lot of ups and downs, so you could have support at certain spots. It could bounce back up off the 50. It could bounce off some other support resistance lines, but if you follow this red volatility stop, you can see how it changed on Wednesday, or even Tuesday you had a negative candle, but you didn't, it wasn't breaking the green volatility stop, but you were right at 50, so a lot of times you wait to see if it's going to be supported at the 50. And it hasn't quite broken this trend, which is fairly short, but the MACD is rolling over. It hasn't crossed. So there's still time for that to happen. That's the other thing with the MACD. It's a bit of a delay, so it didn't actually cross if you wanted to wait for a cross. But you see how we're heading back downwards. If we go to, I'm just going to quickly go to the weekly chart, and this might be the reversal spot, but it was heading back up towards the resistance line, like this one here. There's hope that people thought it would go back and maybe bounce off the 50 or something. But you are still above the green on the weekly, but shorter term, that was a pretty significant statement, I think, which means that there's more tightening beyond what people think. There's more quantitative tightening, and there's more interest rate hikes coming, or might stay higher for longer, sort of thing. So markets get ahead of themselves in terms of what they're hoping for a reversal. But same thing here. We had sort of a failure at 200 maybe, or a little bit at this resistance line that's longer term. And even if you see these crossovers, you get these long swings and then it crosses, and that's where you want to swing trade. And you can see here we had this long period, it crossed, there's now an uptrend, it's turning around. It might not cross over, but that's a decent size run, so it would make sense. And the stochastics are rolling over, which is a overbought sort of thing. So that is a possibility. VIX, it hasn't gotten green volatility stop, but there is you can see how it's reverted back. So it's not 100% confirmed reversal, but there's a one called in TC2000 called VIX dash X. And, it's similar to the VIX-Y. It's just the index. And, volatility was going down, which is interesting, but because a lot of times with these drops, you get high volatility. But so we'll see if this reverses, because we did get down here and it could turn here, but it hasn't done that yet. So the things that are making the markets go down or that act in the opposite way, one of them is the UUP, which is the US dollar index. You can see, actually, like I mentioned earlier, a bit of a heads up that was going to happen. You had this bounce right here, right at this recent low, and we got up above the V stop, above the 80 EMA, the T line, actually quite a few days ago, and that was on Monday. So there was a sign that the dollar, except it hadn't quite crossed yet, but there's a sign that the UUP US dollar is strengthening again, going back up, as you can see that happening a few days prior. And then you have the opposite of the bond funds, which TBF, this is a 20-year, it's not a 10-year bond fund, but it's 20-year. And this morning, we have a green volatility stop. And actually, I was going to mention that you can see right here it says 745. That's the pre-market. Up here you can see pre-market. You can turn that off if you want, but the TC2000 shows you the pre-market and the post-market. If you go down to 10-minute chart, you'll see a gray section which is showing you the pre-market if you wanted to trade that. And so wherever you do your trading, a lot of times you're allowed to trade in the pre-market if you wanted to. There's lower volume, but it is possible. So the TBF is something that you might want to buy if you think interest rates are going to continue to go up. So now we've had this little pullback, and now we're starting to head back up again. It's in terms of waiting for the crossover and all that, you definitely lose time in some of the gains if you wait, but you haven't quite crossed back over yet. So once I look at that, I will look at another thing I have on TC2000 is a tab. And these are all the US sector ETFs that I've sort of found on my own that I consider purchasing, because there's a lot, and some of them have low volume, or some of them I don't really want to buy. And there's also triple X and double two-time leverage funds. So the things that you might want to consider, as I mentioned, UUP and TBF, those are your yields going up and your US dollar going up. There's a shorter-term bond fund yield, which is SJB, and that is similar to the other one, the TBF. But you can see that they're not great. Commodities could go up because the interest rates are indicating higher inflation. So there's a variety of those. GSG is the one I was talking about there. But you can see that most of them are negative now. So what I'll do, I'll go to the inverse ETF tab. So in TC2000, I can do all these tabs. And each one of these is a watch list. So if I go watch list here, and personal, I've got a whole bunch of watch lists. So if I want to put one of these watch lists, I can click on it just to see it. Let's just pick new uptrend. I already have that on there, but there's nothing in there. But then you click this little icon here, and you can move it and put it on a tab. So that way you've got a lot of tabs with a lot of different watch lists and different scans. If you want to scan, you click on this button. And if you don't like the scan, or if you want to change it, you can click an X. But this is when the price is crossing up the volatility stop. So that was yesterday, because Biddy is not open right now. And it'll be close to crossing the, that didn't actually, oh, this isn't on an hourly rate, okay. So what I was looking for is ETFs that cross on the hourly. So one thing you could do with the volatility in the markets is trade on an hourly basis and stay above the 8 EMA. So you could do these little swings because things are quite volatile. But even then, it's not great. Sometimes you don't just use the V stop, but you look at the momentum and stuff like that. So you could use different time frames. But so from there, what I'll do is, if you look at the ETFs that are inverse now, a couple of these are the ones that say .to are Canadian, and they're not updating right now because the TC2000 I have real time US data, and that is only for US stocks and ETFs. So if you wanted to go a little bit more risky than buying the Nasdaq ETF, you can see that ARK is up 2.68% right now this morning. You could switch to an hourly chart, but it can get jagged and stuff like that. But the PSQ is up 1% already. RWM is obviously there's moving averages and other resistances here, but there's a little reversal there. SH is the opposite of the S&P 500. You could some people buy VIXI as a hedge, but if you want to get out early, you're starting to see, and you could put a stop down there, but you're starting to curl back up, but there's no green volatility stop, you're not above the 8 EMA. But that's another one that kind of goes along with this stuff. And you can see the Dow is up in the green volatility stop. That was a fairly big statement yesterday. I mean, the statement had a little window of opportunity for a reversal to the upside, but when Powell came out, he kind of crushed that, as I mentioned. So this could be a reversal sign for sure. So those are kind of what I would look at if you're not going to short. If you want to go higher risk, you've got inverse 2 or 3x ETFs. So you can see here we're up 4.64% already this morning on the inverse of the semiconductors, SOXX. Yang is the inverse of the China Bear 3X. There's a tech bear that's up 3.74%. Like I said, we hadn't quite crossed, but we're looking like we're heading up that way. Gold is going down because the dollar is going up, and even though there's lots of inflation. So this is a short gold. So there's a whole bunch in here of ETFs that I've consolidated into one watch list over time, because there's multiple, there's multiple leveraged ETFs. But Direction in the States is one company. ProShares. See here it says Direction. Hopefully you can see that. I'll move this out of the way. DIREXION. If you type in Direction here, you get to see all the inverse, or not just inverse, but leveraged ETFs. The other one in Canada is called Horizons, and there's a whole bunch, but you can go to the website. Obviously go to direction.com or horizonsetfs.com to see the Canadian ones, and they're not open right now. You don't see them in pre-market or anything. And then obviously the ProShares had some. Ultra, you can see short or ultra short, stuff like that. Ultra yen, ultra short Qs, stuff like that. You can also type in inverse or bear or short, stuff like that, if you wanted to try to find other ones. But I think that's all I want to say for today. Obviously it's a tricky situation with an emotional and reactive to news and type of market. So good luck out there. Don't forget, if you want to get TC2000, check out the link in the description below. You can get a free trial or $25 off your subscription.